LargeMortgageLoans.com was set up in 2003 specifically to cater for those with large or complex lending needs. We work with clients all over the world on all different types of finance, from development funding through to commercial mortgages, complex residential lending, overseas mortgages and later life lending. So an interest-only mortgage is where you only service the interest every month, so you never actually pay anything off the capital. What this means is that at the end of the loan, you still owe the same amount as you borrowed at the beginning. Interest-only mortgages are really popular in the large loan space because they offer something that our clients really need, which is flexibility. One of the main benefits of an interest-only mortgage is that the payments are much lower than with a standard capital repayment mortgage. This is of value to different types of client. Self-employed people are a great example because it greatly improves their cash flow, means that they can put more money into their business if need be, or invest in other things. It also really helps people who tend to get a large amount of their money in bonus, or who have, for whatever reason, much more lumpy or irregular income. Another way in which interest-only mortgages are very flexible is that they allow the client to control how and when they repay the loan. Nearly all of them will come with some kind of overpayment option. So what this means is, as the client goes through the life of the loan, they can make lump sum reductions and reduce the balance. A decade of low interest rates made interest-only mortgages even more attractive. Essentially, some clients find that they get a better return on their investment than the cost of the interest-only mortgage. Therefore, it makes much more sense for them to take an interest-only mortgage rather than buy the property outright. The most important piece of advice that we give to clients when thinking about an interest-only mortgage is how they're going to repay it. Often that is through the sale of the asset itself, the property itself, and that's fine in many cases, but it can also be through a whole range of other things. So an inheritance, through sale of a business, or through regular overpayments from, for instance, bonus. Another key part of the advice is what kind of interest rate is going to be suitable for the client. And some clients who are planning to keep the property for a long time might prefer the stability of a fixed rate, so they know exactly what it's going to cost them. Other clients who, for example, may want the flexibility to make very aggressive overpayments, or who may be thinking of selling the property in the near future, may prefer a variable rate with no early repayment charges. We have really strong relationships with the type of lender who can assist our clients' complex needs. What this means is that when we're presenting a case, we're speaking to the key decision makers so that we can get a fast and, most importantly, accurate decision for our clients. And that's what makes the difference when you're working with our team.